What's up, guys? Felipe here. As you know, I'm here to keep you up to date with current market news and teachings and developments in technology. So here today, we're going to be talking a little bit about what's going on in the economy and in the markets, which have been a little wild lately. If you've looked at the news, there's definitely a lot of fear mongering and a lot of media coverage in terms of panics going on and so forth. So let's start with the economy at a glance. So here the recent economic environment of Fed rate remains sort of relatively high for historical standards. I don't know, in years, 4.25 to 4.5%. Inflation is 2.5%, which is fairly low as of the most recent reading, February 2025. Unemployment rate 4.2 percent as of March 2025, which is fairly low. And then GDP is positive for the quarter of 2024, although there is speculation that that might change in the first quarter of 2025 and might in fact actually be negative, which is not a good thing. So what's going on with the tariffs? Basically, April 2nd, 2025, President Trump signed the regulating import with a reciprocal tariff to rectify trade practices that contribute to large and persistent annual United States goods trade deficits, Executive Order, the EO, thereby imposing sweeping tariffs on imports to the United States. The EO places, with some exemptions, a baseline 10% reciprocal tariff on all imports effective April 5th, which was last Friday, which we kind of saw a bit of a market sell-off that day, as well as additional country-specific tariff rates for nearly 60 countries effective April 9th. So April 9th, an additional set of tariffs for 60 countries are coming out. Some of the things they're exempting from these tariffs are energy and energy products from Mexico and Canada, which basically, I mean, on the US point of view, they're doing that to kind of keep energy prices down. However, the caveat to that is if these countries decide to retaliate in terms of their own tariffs, which is historically what countries do when a country imposes tariffs on them, that can easily change. So this is basically saying that it's going to impact, these tariffs are going to impact things like energy and infrastructure industry, in addition to renewable energy, so forth and so on. It might potentially lead to supply chains disruptions and higher costs that can cause delay in projected timelines. So some interesting things about this recent tariff that's been signed by the president. Kind of the way these things work is kind of a tax that the government imposes on materials or products and merchandise that are imported from outside the country, right? So the idea behind this is one, this produces another form of taxation by the government to tax those items that are being imported into the country, right? And that is through import duties, which basically goes from what is called ad valorem, which is a Latin phrase that it is translated to according to value. Basically, what this means is in the context of import duties, an ad valorem duty is a tariff levied on imported goods as a percentage of the customs value. This means that the amount of duty is directly proportional to the value of the imported merchandise. So the more expensive the item that's being imported, the higher the taxation is going to be on that item because it's according to the value of the item. Some of the benefits, I guess, that they're looking at this from a governmental point of view is they're going to have another form of taxation, right, to tax these imported goods, which can potentially lead to the reduction of the government's United States deficit, which is historically just out of control. However, that is definitely going to cause some pain because markets typically perform well in credit expansions when government is, stimulating, people have easy access to credit and money and so forth. That's typically when the markets do very well, which if you look back in, I don't know, the last 15 years, we've had the longest bull market in the stock market in history. It has been supplemented by easy access to money, easy access to credit, and low tariff rates. So this is going to definitely alter things a little bit in the medium to short term and possibly over the next couple of years. Who knows? So another benefit that these so-called tariffs can potentially create, however, I disagree with, is it protects domestic industries from non-domestic competition, right? But it's no longer a domestic market, right? This is a global market, especially specifically financial markets. They're so interconnected globally that something that happens somewhere else, the effects are felt here, right? So markets being that they are so interconnected, I don't see that as a benefit. For example, a lot of these domestic companies like, the tech companies that are leveraging and using all these semiconductors produced in Taiwan, for example, now the tariffs that are being imposed on Taiwan are going to increase the prices of those products, right? Therefore, the industries here in the United States that use those products are going to have to pay more for those products because typically the importer, the company that imports the item that they're utilizing, are going to pay those taxes. But at the end of the day, they're just going to pass those costs along to the consumer. But here's the tricky part. If the consumer is already stretched in terms of credit, money, and so forth and so on, it's going to ultimately lead to people buying less things that are not necessary, which is typically where things get bad. So yeah, basically the ad valorem duties are a significant source of revenue for the government as the amount collected directly scales with the value of the imports. So the more expensive the item that is being imported, the more taxes that are charged on those items. So this is going to be interesting how this is going to play out. A close example that I can think of that kind of gives you an idea, at least historically, what's happened in the past in a similar situation to this would have been in the 1930s with the Smoot-Hawley Tariff Act that was imposed or signed into law by President Herbert Hoover in June 1930. Interesting enough, that was right after the Great Depression, right? So a lot of people say that that actually created or extended the dramatic effects of the Great Depression, which it kind of did. Basically, the impact on global trade that tariff had in the 30s was that global trade plummeted by an estimated 60%. Between 1929 and 1934, U.S. imports decreased 66% from 4.4 billion in 1929 to 1.5 billion in 1933, and U.S. exports decreased by 61%. So that created, or exacerbated the Great Depression, which, I mean, it's interesting because 1933, 1934 was pretty much the tail end of the Great Depression when that specific act kind of went out of play towards the end. So interesting now, looking at it from the perspective of today in time, we have a lot of similarities to what happened in the past. In the example I just spoke about, for example, all-time speculation. The speculation in the markets is absolutely insane in terms of people speculating and a lot of new investors in the market. In terms of speculation, what do I mean by that? I mean, just think about all these random crypto tokens that have been coming out over the last couple of years that are just pumping dumps and people are just piling money into them. That's a quick example. There's been a lot of changes in the actual United States indexes, for example, the S&P 500. Now, whether you like it or not, whether you're pro crypto or non-pro crypto, when you invest in your 401k, when you invest in certain retirement accounts, you are by proxy investing in Bitcoin. Why? Because certain companies have been implemented into the indexes that have exposure to those cryptocurrencies, right? An example of that would be MicroStrategy, which recently was implemented into the S&P 500, which is pretty much a company that operates on diluting shareholders, gathering debt or selling debt to acquire funds to just continuously buy Bitcoin, ideally increasing said price of Bitcoin. However, what happens if Bitcoin declines dramatically to a certain point where it could lead to a bankruptcy in that company? That can trigger a pretty dramatic catastrophic event for the indexes that have exposure to them. And then that's kind of probably why we're seeing a little bit more volatility in the markets, because in addition to a lot of these high-tech flying companies that are, in my opinion, kind of overvalued, now the indexes have exposure to the crypto market in addition to other things. Another interesting fact is, much like back in 1929, before the Great Crash, where investors were speculating and using margin and so forth, because they assumed, hey, stocks only go up. Just keep buying, using margin, stocks are just going to go up. You're going to be good, right? Until they were wrong, right? Which is usually when black swans occur, when people are not expecting things to occur. So another part that I've kind of looked at, and is a company I've spoke about in the past, which interesting enough was implemented into the American indexes, was SMCI, right? Which, if you just look at their filings, they've literally been committing accounting fraud in addition to other companies. So there's a lot of weird stuff going on today that leads me to believe that there's a lot of similarities to the past. And what that means, I don't know, if things are going to basically come full circle, but when you compare things, it looks like it's a probability there, right? So here, what I was talking about, the consumer is stretched. So these tariffs ultimately, right, are taxed by the government on imported goods, with the idea of gathering more taxes to pay down the government deficit, which in a sense does make sense, right? Because if the government deficit gets out of control, that's how governments pretty much go bankrupt, right? And bankruptcy is always the end of greater accumulation of debt. So if that is not controlled, it's going to potentially lead to the ultimate bankruptcy of the United States, which would be a horrible event. I mean, Adam Smith said this beautifully: when national debt has once been accumulated to a certain degree, there's a scarce, I believe, a single instance of there having been fairly and completely paid. So Adam Smith was an economist a long time ago. He basically said that typically when governments accumulate certain degree of debt, it is never ever paid. So that's an interesting way to look at it, but that's kind of a part of what these tourists are attempting to do, help the government deficit decrease. So here we have basically consumer credit debt, which if you see here, the interesting thing is usually when consumer credit peaks, it ends in following recessions, right? So here is kind of the example of the 2020 market crash, which was kind of an anomaly, right? Because COVID came out of nowhere and just caused a massive panic. But since then, credit card debt has just blown up, which makes sense, right? Credit expansion leads to growth in markets because people have more access to funds, right? So that's kind of makes sense in the term that markets are at were up to recently in historical all-time high. So that kind of correlates to that, right? So when does this credit, freeze where people are no longer, or they're going to be so tight that they're not going to have access to that credit, is when things get scary, right? And that's when typically those recessions occur and that nastiness comes around those times. So that's an interesting thing that I've been looking at. So in terms of what happened today is pretty interesting. So the Dow, which right now you can kind of see here, has a doji candle. Doji candle just basically means indecision. That basically means traders don't know where this thing is going. But it nearly dropped 7% today, which it would trigger a circuit breaker. The first level of circuit breaker, which is basically, what is a circuit breaker? It's a safety mechanism that temporarily halts trading on stock exchanges when the market experienced significant decline, preventing a panic selling and further market instability. So it's a way of stopping the market from panicking in a short period of time. But the first level typically halts trading for 15 minutes. And interesting enough, the Nikkei actually triggered a circuit breaker today because it fell beyond 8%. So the Nikkei 225, which is the Japanese index, kind of equivalent to the S&P 500, got hammered today, like absolutely hammered. The last time it dropped quite a bit was August 5th, 2025, when the whole Japanese I forget what it's called, trade happens, which kind of caused a short panic, and then everything recovered from there on after. Whereas recently the index kind of got pretty nastily hammered, and if you look at the Nikkei, it's kind of like up to recent time sort of ended up surpassing 1989 highs, right? Which after 1989, the Japanese markets crashed, and it literally took up to 2025, 2024 to recover 30 plus years after. So it can kind of show the dramatic, devastating effects of overvalued markets and when massive speculation occurs. Other things that have kind of like caught my attention is the home builders. So the home builders have been getting hammered too. XHB is basically the Spider Series home builder ETF. So it's basically a basket of home builder stocks. You got the big boys in here like Dr. Horton, Leonard, so forth and so on. Howard Hughes. So the home builders are getting hammered. This kind of makes sense to a certain extent because, hey, the expectation of tariffs, right, increases the cost of materials. What do these home builders utilize to build their homes? Materials, right? So if these materials are expected to increase in price, these home builders are expected to struggle a little more, with the added fact that it seems like people are not buying as much houses these days due to the higher prices and on top of that, the higher interest rates, right? Super cool thing here is sometimes these patterns like play out. So here I was looking not too long ago, this developed a head and shoulder pattern, and then shortly after it just really got hammered. So the home builders, why this is interesting to me, because home builders are leading economic indicator, basically. Typically when home builders begin to do very well, it means the economies are recovering. When they begin to do very bad, it means the economies are heading into recession. It's kind of like the stock market, which is a leading economic indicator, where you can contrast that to lagging economic indicators like unemployment, inflation rate, and the CPI and so forth. So this kind of gives you some comparisons in terms of that. So why I think this is going to be deflationary, even though everyone is talking about, oh my God, inflation is going to get out of control and all that. I just don't see that happening because, I mean, credit is already expanded. By credit, I mean, people are indebted in terms of credit card debt and other forms of debt to the extent that how can it possibly get any worse in terms of, people being able to, put on more debt and more credit card debt and so forth and so on, which that would be the only way the markets would continue going up, relentlessly. People having access, or institutions having access to easy money, right? And credit and so forth. So oil, for example, crude oil futures for quite a while has been, saying the contrary. Hey, I don't think this is going to be inflationary. This looks like it was going to be deflationary due to all the other things that are going on. So oil as well is getting hammered, and energy is typically another indicator of the expansion of economies, right? Because when economies are booming, that's inflationary, right? It means more items are being shipped, more items are being transported from country to state, so forth and so on, utilizing more energy, right? So that kind of creates an inflationary scenario, right? Whereas we've been seeing oil has been saying the contrary. It's been saying that no, this looks deflationary in terms of it looks like prices are going to go down, which it is what it is, right? So the way I'm looking at this, if this is, the potential of start of a real, bear market, which again, bear markets can be dangerous to navigate in the sense that within bear markets, there are, bull rallies, right? There's rallies that if you try to play the bull market, those rallies within the bear market can kind of like wipe you out, right? So it's volatility at the end of the day, right? Because stocks, if we're entering a bear market, they're not just going to go down dramatically. All those stocks do go down fairly quicker than they go up, at least historically. But within bear markets, there are rallies, right, where the market can rally up, which I would expect after these big sell-offs it's going to do. So ways to play these, if that is the case, is counter-cyclical industries, right? For example, here I have an example of a counter-cyclical company, which is Philip Morris, right? This is basically a company that's been around for a bit. What they do, they manufacture and sell smoking products, right? Like cigarettes, non-smokable products like Zins, which have been very popular over the last year or so forth. But you can kind of see here, even though it's kind of taken a bit of a hit over the last couple of days with the market, because everything has gotten hit, and I'll kind of show you that in a second. This has actually been performing well while the market's been going the opposite way, because this is an example of a counter-cyclical company. So it pretty much over the last couple of days, all industries have gotten hit. Here we pretty much have the regional banking sector got hammered, in addition to, of course, the tech sector and other sectors that got hit over the last couple of days, including international markets like Asia and so forth. Europe has also taken quite a hit over the last couple of days with all the fear that's going on. But here's just an example of the banking sector always also, feeling the effects of what is going on. So definitely interesting times we're in. And then lastly, just the VIX, right, which is volatility, is kind of in an interesting place. It really skyrocketed since the administration announced the tariffs, where typically when this goes up dramatically, it means a lot of people in the market, a lot of investors and institutions are buying insurance for their portfolio. What I mean by insurance, it means they're buying option puts. So when this thing goes up, it means people are pretty much, hedging. They're protecting themselves against market declines because this goes inverse to the market. And when the VIX spikes, typically markets decline, but this has quite a bit of a spike, which interesting enough is it has not yet reached the level that it did in August 5th, which was when the Japanese carry trade thing was going on, but it is quite close to that. However, volatility doesn't just dramatically go up relentlessly, and there's a possibility that it might potentially drop in the near future, which would ultimately lead to a market rally, right? Because when volatility is high, typically people like to sell it. It's dangerous, but people like to sell it as a way of collecting a premium, or typically when volatility goes up, it has to come down. If it continuously go up, it's the end of the world pretty much. But VIX futures here, major volume. From what I've seen in the recent past, but you can kind of see here the future months are kind of expecting volatility to decline, but this of course can all change in a heartbeat with like news, developments, or anything that might happen economically globally that can strike fear into people. But the way I'm seeing it, there's so much fear going on that there's a possibility that the market might potentially rally over the last couple of days. But a date to keep in mind is April 9th, when the administration plans to, unleash further tariffs out on those 60 countries, which again, my perspective of that is going to lead to domestic companies having to pay more for imported goods. So the cost of their production is going to go up. They're going to ultimately pass that over to the consumer, right? which is you and I that are buying their goods. However, the consumer is already stretched, right? Consumer is heavily indebted in credit card debt, historically at least. So what is that going to look like? I don't know, but there's a possibility that domestic companies are going to suffer as well in terms of revenue and earnings and so forth, which ultimately leads to lower stock prices. So that's going to be interesting to see. But with that being said, I kind of want to give you guys a bit of an update on some of the stuff that I'm seeing, and it's super interesting. And you tell me, what do you think these tariffs are going to ultimately do? And what do you think about kind of what I shared about in terms of what happened historically in the 1930s when something similar to this was introduced, and the effects that it had now is going to be different, or is it going to be similar? You tell me. But all right, I'll talk to you guys on the next one. Have a good one.